Good morning, money magnets and master traders. After back testing that downtrend line, the downtrend line that we had for a few months, we had a downtrend line for a few months, and we broke out that downtrend line back on June 2nd, back tested it recently as a support on June 5th. And then what happened on Friday? Well, we gapped up. Bulls, if there was any dip buyers from that area, bulls should have been pretty happy. And we went and hit the 1.236 Fibonacci level. It was around 600.25, but I rounded up to 0.3. Went a little higher than that, but closed just above my 599 level. Overall, guys, what is the behavior of this price action? Overall bullish still. So today, as usual, Uncle's going to talk about the charts, the levels that we need to watch out for, the setups to see if the market is either going to continue upwards and continue to be bullish, or is it going to reverse, or is it going to chop. We need to prepare, and people can make predictions all they want. The market's going to go up, the market's going to go down, but whether you think it's going to go up or go down, you still need to know what it's going to look like on the chart so you know how to trade it. So with that being said, let's cover the bull case and the bear case scenario. As I mentioned, the 1.236 fib level has been hit. When do we as sheep style traders trust the rejection? We trust the rejection from resistance level when it's strong enough to break down support levels, when it's strong enough to give us a false breakout setup. Now below 600.3, Uncle has 599, 597, and the critical level of 595.5. We recently recaptured that level. False breakdown setup around that area. That is where the last daily chart trap setup is and was. If we are to trust the rejection from this fib level, those levels must break down, and I have a trend line here. Right on 594 is the breakdown level. Below 594, bears would be in full control. Why? Now, if we are to get more upside though, and we get this little selling pressure from this fib level, but when do we not trust the rejection? We don't trust the rejection when the rejection is too weak to break down a support level. Based on the context of the daily chart, yes, we hit that resistance level, but there is no evidence just yet of strength of rejection from that area, because we didn't break down any support level. So come Monday and Tuesday, we are going to find out. We as a community are going to find out if this rejection had any strength. Because if there is follow through, we'll break down those support levels that I mentioned. But if there is none, 600.3 is going to clear. That would put 601.7, 603, and 605.5 plus in play to the upside. More fib levels to the upside. We can definitely hit those targets, but only possible if we clear 600.3, 601.7, and the 603 fib level. Follow the price action. That's what sheep style trading is all about. You do this, you will be a money magnet. The money will flow to you. Don't focus on the money, focus on the trading plan that Uncle just gave to you. Moving on to QQQ, as far as support levels go, I have support at 528.5, 527, and of course 525. We break down those levels. 523 would be in play, and below 523 would be a breakdown of support level. And this mother candles range, we do have an inside candle setup here. Mother candles range would break down 523. Multiple reasons why we'd be bearish if we break down those levels. 527, 525, and especially 523, because mother candles low around there, fib level, and it's also a breakdown of this multi-month trend line that I have that extends way back to April. So below 523, bears are in full control, but we can't get there yet unless we break down 528.5, 527, and 525. Now, if we are to get a bounce and we are to be bullish, the levels that must clear are 530, 531.7, and 533. That's the top of the mother candle's high. If we cleared those levels, Uncle would be bullish to 535, 536.7, 538, and 540 plus for QQQ. NVDA. That was a red candle for Friday, but that's technically a higher close compared to Thursday. And it bounced right around a fib level I have at 141.5. Well, guys, it's a cluster here. 141.5, 140.5, 139.3. It's a cluster. But I tell you, if we break down those levels, it would be possible we go fill the gap right around 137-ish. And then below that, I have 135, 133.6, 132, and 130.6 all in play to the downside. Gap's actually around 131 as well, keep in mind. But not possible unless we break down those clusters of support levels that I've mentioned. 141.5, 140.5, and 139.3. Definitely more downside in play. Now, if we are to get bullish, I need to see a few levels clear. 142.5 and 144 are the two levels that must clear to get to 145.6 and 150. I would be bullish. We do have an inside candle setup, so I would be bullish above 144, the mother candle's high, and that should send us to the upside. Here is Tesla. Now, it was bearish. Wow, it was bearish on Thursday. Friday, not as bearish. Pretty decent trading-wise, but not as bearish. We did hit that 291 level as support. That is a fib level. So if there is going to be more downside coming this week, 291 is the level to watch, and it must break down. If it breaks down below it, we are bearish 289 down to 285, possibly balling back down to 280 in the low 270s. This is a very volatile stock. And if we lose 291, it's going to be very volatile heading to the downside. Now, if we are to be bullish, I have 295, 297, 300 as resistant levels. They all must clear to put 302, 304, 305.5 in play. And above that is 307 and 309. 309 being a fib level. I would expect more upside, more bullish follow through if we can recapture 309. Otherwise, if we lose 291, bearish. Coin, well, the head and shoulder pattern is not invalidated yet, but it didn't break down the neckline still. I have support at 250, 248, 246.7. That's a fib level. 245, definitely lower, but the main level is at the neckline, which is at 239. If you're a bear, you want to see those support levels that I mentioned fail, but the main level you want to see fail is 239 for this big pattern of head and shoulder pattern to play out. Now, it will get invalidated, and the possibility will be gone if we start clearing resistant levels. I have resistant levels at 252, 254, 256, and the critical one at 257.5. If that level clears, 259, 261, 263, and 264.8 would be in play. Now, above 264.8, it could invalidate the head and shoulder pattern because that would take out the right shoulder. Here is a VIX. VIX is looking bearish. Back tested at that uptrend line that we broke down and then gave us a lower low. That is bearish price action behavior. We lost that 17 level. As long as price stays below 17, 15 or lower would be in play. I will trust no bounce unless 17 and 19 can recapture, especially 19. So that's what I have for VIX. A bearish VIX is usually a bullish SPY, and a bullish VIX is usually a bearish SPY. So keep that in mind. I use the VIX to help gauge the SPY. It's pretty helpful in my opinion. But yep, that's what I have. I hope you guys found value in this video. I love y'all. Peace.